All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market this morning set to open up about 15 points lower here. I forgot to check fair value, but it's within a point. So about 15 points lower here on the market, which is a substantial gap here. It's not going to look like a whole lot on the charts. When you take a look at the index charts this morning, it's not going to look like much. It's going to look pretty mild, pretty modest relative to, what is going on out there. And, we'll see the S&P trading just under yesterday's lows here at the open. Still well above the 7, still above the gap from Wednesday post-election. And so we'll see that here this morning. Now, if we look at how S&P futures moved overnight, you can see that during the Asian session, they were pretty calm, pretty tame. But we saw like what we saw last night. We saw them start to really drop during the European session. And why is that important? Well, because there's going to be a lot of talk about why the market drops. Is it because of China and trade war? Is it because of, the U.S. and President Trump and the Democrats and, that whole drama? The reality is probably not. It probably has something to do with Europe. What's going on in Europe right now? Well, we talked about it the other day. It's the Italian situation and the budget situation there with Italy. There are some positive drivers with the UK, but yes, they had a high watermark in GDP, but there are some concerns of slowing in the future, which, doesn't that sound familiar as far as everything, right? And so that's kind of where we saw the bulk of the selling really come into play, and that's what's going to drive the market gap down. Now, we did see tech stocks weak, overseas. We see materials weak overseas. So there's going to be a substantial drop in some of the things like an FXI, the FXI ETF, China ETF, going to, take it on the chin here a little bit this morning. The emerging market ETF here as well. It'll be interesting to see how U.S. banks hold up here this morning. They've been holding up pretty well pre-market, but overall, this may be one of those mornings where, when you look at the Walmarts of the world, you look at the AT&Ts of the world, you look at the Verizons of the world, they're probably holding up pretty well. You look at other things, and all right, they've got a little bit of a kick down, coming into them here this morning. Today is the last day of the week, and the first full week of November here coming to a close, and it's going to be one where I expect that we will have some elevated movement here in the market, meaning the market may trade in about a 30 to 40 point range here today. And just given where things are. Now, this morning I posted an article into chat, and this is an article that I've been chewing on for the last weeks, right? And really trying to get at what he's talking about, what's going on. Cliff Asness here is sometimes referred to as the godfather of quant trading. Quantitative trading, which is algorithm trading, mathematical trading, automated trading, right? The algorithms out there. And there's always this perception that, oh man, the market's going, the algos are taking it, they're making a mint, they're doing this, they're doing that, the algos, right? But he called this liquid alt Ragnarok. That's a pretty strong word. Ragnarok, that's pretty intense. There's a short version of this, and it's not too long. It's pretty brief, read. But if you hit now dive in, it'll give you the full version. That's a long read. Like I said, it's taken me a while to digest it and to go through it. In fact, I actually printed it out to be able to go through it. But it is a long read. It's 23 pages. Granted, some of these pages, a lot of footnotes in here. But a very interesting read. And basically looking at why quantitative trading is really taking it on the chin. Why quantitative trading is getting blown apart. And October, awful month for the quants. Just terrible month for the quants. Why do I share this? Why do I show this? Because in the market, there's a natural tendency to go, well, okay, this isn't working. Let me go find this. Let me go do this. This must be working. Let me go do this. I got to learn this. I got to learn that. I got to go here. Got to go to there. The reality is in the market makes the fools out of the majority of the people, no matter what they're doing. And it's one of the reasons why you see me stick to the challenge. Because I have 3K risk. I know I can go out. I can make quality decisions. I can go hold Adobe after Wednesday, knowing the odds are strongly in my favor that it goes higher, but I know that it might not. I know that, okay, I have a trigger on Halliburton, but you know what? Sometimes things happen. And it's one of those things where I don't have control of that. But what do I have control of? I have control of my risk. And it's one of the reasons why no matter what strategy you hear me talking about or looking at, or when somebody asks me a question about, hey, what do you think of this and what do you think of that? I always boil it back down to what? The risk. Because that is the only thing that can be controlled in the market. Outside of that, the market it's a petulant teenager. That's what the market is. And, it has these ebbs and flows, these, whoa, what's going on? Where did that come from? And it has this, okay, you know what? This is the expectation of, oh, really? It has a ton of that. And the reality is sometimes we can react to it well. Sometimes, you know what, you take kind of the, all right, I'm not going to overreact here, but then it continues to blow. And sometimes you react, and then it reverses real fast. And it doesn't matter what you're doing in the market. It doesn't matter whether you're trading spreads or you're trading, covered calls or you're trading stocks. All those same issues come into play. And, this is one of those that I just share with you because I know that there is a perception out there, when it comes to the quants, when it comes to this automated trading that, man, it is just, once you get it, it is the holy grail. And, you're basically, printing money. But the reality is, the quants, they're losing money. They have investors that have been heavily involved, and they actually see net asset flows out right now as some of that confidence is going down. Now, ultimately, Cliff in this, he's positive on quant trading going forward, but he really lays out the the risks and everything else. And we see this from time to time with quants or hedge funds or different money management strategies and all that type of stuff. But I show it to understand how the market really is and how it affects everybody. And it's one of those things that it always makes me glad that I'm trading in an environment where I control my risk. And yes, I trade the challenge, and that risk is defined, and I take risks, and we get rewards, and sometimes we lose, and okay, it's up and down, and sometimes people are very emotional about those ups and downs. But the reality is that it's going to have heavy ups and downs on a percentage basis. My personal trading doesn't have those same up and downs. It's a little longer term in view of a lot of things, but I know my risk. That's what I can define. And so when it comes to your trading and what you're doing, know your risks. That's what you can define. That is what matters. And, the market itself and what's going on will constantly change. We can look and analyze it. We can look at the numbers. We can say, hey, these are the odds and all of that. But the reality is the market, can react very differently from time to time here. All right. Now, this morning I am looking. I do need to jump out of my Halliburton. I'm not sure where it's going to open up here this morning, but I'll probably be down about $500-600 on it. So I'm going to take it off and move on here from it. Hopefully, my options open up around 60 cents. That may be a little optimistic. I'm not exactly sure where Adobe's going to open up. There's the bell. Okay, it's opening up about $2 higher, but again, the options have to open up. here's Halliburton. You can see the options. They're open, 4 cents to 79 cents. So it's not like I can actually get out right here at the open. And so I'll have to wait for those to come in here a little bit. Hopefully they'll come in fairly quickly here. And I'll be able to cash on out. Yeah, 30 to 55. That's a little dramatic there. Still to get out. But you can see Halliburton, yesterday low volume drop. Okay, great. Picked up volume into the close. I almost got on video to close it in the last 10 minutes, but decided I'd wait till this morning. That's going to cost me. But overall here, you can see it kind of breaking on down. I could hold it, but I think I'm going to, move on out, depending on where this option value is. If this option value is at 40 cents, I will probably hold it. You know what? It's at 40 cents right here. It may be worth holding for a little bit of a bounce. Because in the short run, we've gotten a bit oversold here in the short run. If you look at HAL, you can see the CCI at minus 300, right? And that's where it gives me pause to say, you know what, I could probably get a better price on a bounce. So I'm gonna give it here just a moment. Well, maybe more than a moment here. Adobe, on the other hand here, I may have to just take it and go. It's moving out of the money here on me. If it's not able to find a base pretty quickly here this morning, I may need to just swallow my loss and move on from that. Let's see where it's at. The option here. That's at about $3. Still one of the best reward potentials for upside out there in the market, in my opinion, if it's able to get that traction to the upside. But it just has not been able to. Nice day on Wednesday, and like we mentioned, odds favor going higher, but it's reversing right here. You can see the low volume sell, so this morning it's gapping down here with the market. This is a market element here. We've been in Adobe long enough to know that it can switch very, very quickly. It's in a little bit of no man's land, so I'm going to give it just a little bit longer to open here before making a decision. Kind of hoping we'd be looking at both of these trading above the 7-hour moving average this morning and be in a nice spot. But we don't have that, so going to have to react to what is there. Yeah, the Pepsis, the Cokes of the world, Walmart, Verizon, they're in the green here this morning. Everything else is pretty bathed in red. In fact, if we come in here and take a look at the index watch and just pull up the S&P 500 this morning, we're at about 350 decliners, 150 advancers. Most of those advancers probably in the healthcare, consumer staples, utilities area. Utilities are down. Yeah, healthcare is pretty flat, so most of the gainers are probably there. Yeah, consumer discretionary down, but that's probably more of an Amazon effect. We definitely have a few more consumer discretionary stocks, in the green out there. Today. Banks holding in there pretty well. Early on, they're definitely holding in there. All right. I sure hate to do this, but I'm going to close my Adobe. I'm going to close it here, take it, and go. 251 is my fill. 251 is my fill. And yes, that trade hurt. That one hurt. When it comes down to trades, it doesn't knock us out. It doesn't, but man, that one stings. That one stings. All right, so out of Adobe at 251. Let's go Halliburton. Where are we at? 40 cents. I'm gonna take it here. I'm gonna take Halliburton. I'm gonna go to cash. 39 is my exit here on Halliburton. And out of Halliburton. All right. This should leave the challenge down around 3,000 here in terms of where the challenge is. Yeah, 28.37. So we've done a big round trip right here, never fun to have a round tripper like that. But it's one of the took the risk here with Adobe. To have some exposure through some of this action. The stock really hasn't gone against us in a big way. In fact, the stock's only down $3 from where we got in. But holding the option as long, did definitely cost there. And then Halliburton just broke and took off there to the downside with the continued breakdown in oil. So, there are a lot of things out there that are in interesting spots and interesting positions. Nike is one that I really like. I'm very interested in washing a little bit of this sour taste of Halliburton and Adobe out of my mouth. And I'd like to go get in and, get that washed out. At the same time, I'm not going to make a decision right here. I do want to kind of see how a few things play out a little bit here this morning, where they're at, how they kind of come into their own throughout the course of the day. See where some of my signals are to make a really good risk reward decision there. And so we'll likely not make a trade here in the next hour or two. I'll be kind of doing my due diligence here, and we'll see kind of where things are at, and what opportunities are there to be bought, and is this something where we see the metrics breaking down a little bit? If it is, if we are seeing the metrics break down, do we have a chance to play the market back down to 272? And I do think that is a potential that the market has, and a possibility that the market does have, and something that has to be accounted for here overall. So anyway, we'll be jumping off and taking a look at some of the risk reward opportunities, and then we'll jump on a little bit later. Overall, market here on the open, you can see the S&P, it's not much of a move. It's really not much of a move here just yet. It could definitely accelerate. We are seeing some gaps below 7-day moving averages today, a few more than what we have been seeing in the market. In fact, let's see if I can pull it up here. A 7-day gap. That one's bullish. Let's go and throw on a bearish one. Run that scan. Yeah, 448 stocks. Now that's not the S&P. Let's pull the S&P in here. That's a lot of stocks gapping below their 7. Yeah, about 10% of the S&P gapping below its 7. That's a really big number. That's a really big number there. You can see a lot of it, industry-wise. Yeah, it's pretty mixed industry-wise. So, that's a fairly heavy number. But overall, I don't think it's a number that you say, wow, okay, market's got another 80 points lower because of this number. I do think it's a little bit of a warning sign that, we may not get a real strong reversal here on the day. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.